Okay, we are now to the interest section of itemized deductions. So as always, I want you to start off and tell me really quick, for itemized deductions, are they considered a personal or business deduction? They're personal. Which schedule do we report them on? Hopefully you said Schedule A. And are they considered a for or from AGI deduction? Hopefully you said from. Okay, so interest. Interest expense, personally speaking, because remember, these are personal deductions, Congress usually says, nah, we're not going to let you do that. But there's always exceptions, right? I think, gosh, I can't remember, 70s maybe, we could deduct interest on credit cards. That alone would bankrupt the country right now. So personal credit card interest is not deductible. But what if I used my credit card for my business? That interest is, but I wouldn't do it here because these are all personal deductions. I would do that as a for AGI deduction. Okay, so we're just in the personal realm. So what about student loan interest? Is that deductible? It is. You've already had that by this point in the class. But here's a curveball. That's personal, right? You chose to go to college. Is that a for or from AGI deduction? Weird alert. Congress made that one a for AGI deduction. You don't put that on your itemized. Why do you think Congress would do that? Stop the video and see if you can come up with a reason. Okay, so we've talked about the fact that not very many people itemize. So Congress chose to make student loan interest a for AGI deduction so that more people could take it. They really want to encourage US citizens to go get college educated. And this was one of the ways. Fine, if you've got to take out a loan, we'll let you at least deduct it. Okay, so what does go on here? There are two primary areas. One is related to mortgage interest. So what is a mortgage? A mortgage is when you take out a loan and it's backed by a piece of real estate. So we're talking about your personal use home here. So what kind of limitation do we have on mortgage interest? Right now, the limitation is not on the amount of interest itself, but it's called on acquisition indebtedness. What does that mean? Well, how much debt did I have to acquire my house? So the limitation right now during TCJA years is 750,000 of acquisition indebtedness. How much interest is that? I don't know. It depends on your personal interest rate, right? Everybody's got different interest rates based on their credit score, their debt to income ratio, stuff like that. So I can't give you an actual interest limitation. It's based on acquisition indebtedness. What about points? Do you know what points are? So points are an amount really that you prepay for interest. And the reason you do this is if you prepay some interest to the bank that's loaning you money to buy the house, they're going to give you a lower overall interest rate over the rest of the loan, whether it's, a 20 or maybe even 30-year mortgage. So maybe I pay 1% up front and it drops me 1% on the loan for the next 30 years. That's a big deal. So what do you know about prepaid expenses from your financial accounting for GAAP purposes? Are they really an expense, or where and how do you report those? Remember, those are really an asset. Prepaid expenses, it's really an asset because we haven't used it up yet. So Congress actually changes this up some and decides whether or not you're going to be able to deduct that prepaid interest called points. Sometimes when they're really trying to push people into buying real estate, we've had different downturns in the market. So you can just look at the applicable year and see if points are allowed to be deducted or if maybe they need to be amortized over the life of the loan. What about a home equity loan? What does that mean? Well, you can, from financial accounting, know what equity is. Say my home is worth $500,000 and I only owe $100,000. How much equity do I have? I've got $400,000 of equity. And generally, banks will loan me money if I need to borrow it and use my house as collateral. Now, they may not loan me the entire $400,000, the amount of equity. A lot of times they might loan like up to 80% of my equity or something. But for a long time, home equity interest was deductible no matter what I used it for. I could go take that loan and do like a cruise around the world for the next 12 months or something. And they were like, all right, it's a home equity loan, you can deduct it. Well, during TCJA, the rules changed and said you may only deduct home equity interest if you're using it for your personal residence. So, maybe I wanted to put a new roof on, or I wanted to build an extra bedroom onto my house. So I can still take out a loan, a home equity loan, and take a cruise around the world. I just couldn't deduct the interest from that. How does that affect our 750,000 of acquisition indebtedness? It's smushed together with it. So I can have a real loan and a home equity loan, but the max amount of that loan of the indebtedness can only be 750,000 through TCJA. It was $1 million before that. We'll see what happens after 2025, what Congress changes. Okay, so what is this second one? Here's the one, in my tax class, I introduce here in the itemized deductions chapter, and then we work on it again later. It's not terribly difficult, but my students miss this a lot on 2 different exams. I think they just don't spend a lot of time on it, or it's more interesting to talk about mortgage interest. I'm not sure. So make sure you pay attention to this one, investment interest. What does that mean? It means if I go out and borrow some money to purchase an investment, then I'm going to have to pay interest expense when I borrow money, right? And the Congress says, fine, you can deduct that here on Schedule A, but it has a limit. Remember this one, the limit was the 750 of acquisition indebtedness. The limit here is net investment income. So you kind of got to work a problem to see what that means. I'll do a really easy one now. I'm going to borrow some money from the bank. What's an investment you think I might buy if I borrow money from the bank? Stock, a lot of people buy, but I could also go buy some land. Say this area of town is growing a lot, and I think, oh, I'm going to buy that land, and I bet in 2 years the value is going to go up a lot. So I purchase it. I can deduct my interest, because remember, I've got to be paying the bank back, and I have to pay them some interest on that loan. I can deduct my interest I'm paying the bank, but it is limited by my total net investment income. What does that mean? Well, by any income I receive from investments. So say I own some stock that spits out dividends, and I own some land that currently I'm not doing anything with. I'm just hanging on to it. What is my net investment income? Well, it would be the dividend income from my stock. And then this word net's there for a reason, right? So let me just put some numbers to it. Say I had $4,000 in dividend income. No income from my land, because it's just sitting there and I hope I appreciate it. 4,000 would be my gross investment income. What does the net mean? Well, net investment income is your gross investment income minus any investment expenses except for the interest. So what other sorts of investment expenses do you think I would have related to that stock or land? Well, we know we have to pay property taxes when we own real property. So I bet I'm going to have some property taxes related to that land. Say I had $500 of property taxes that I had to pay last year. Now I get down to a net investment income of $3,500. Okay, well, let's go back to the loan that I took out from the bank to buy this land. Say this year I had to pay $3,800 in interest expense. $3,800 in interest expense on my loan from the land. Can I deduct it? Does it matter that my land did not give me any investment income? No, I get to look at all of my investment income, whether it's from stocks, land, or any other investment I have. So luckily, I did have some income, $4,000, but I'm limited more than that. I've got to find the net investment income. So of this interest expense I paid, I only get to deduct $3,500 of it on my Schedule A. Deductible on Schedule A. Does that make sense? I can't hear you, but you can shoot me an email if that doesn't make sense. What about the rest of it? The other $300? I can carry that forward and deduct it hopefully next year, or maybe when I finally sell this land. Let's see what else I want to tell you about that. We talked about points, that. Okay, last thing, just I alluded to it, but I just want to make sure it's really clear that generally interest on personal loans, and when you use a credit card, that's what that is, a personal loan, is not deductible. So it has to be something very specifically listed in the code there. Okay, that's it for interest.